Come to you live on Jollis Trading Floor. Sorry about that. I had was talking to a colleague of mine. I lost track of time here. Well, as you know, the market is definitely not cooperating, and it looks like we may have another leg down. It does look like there's a very high likelihood that we're going to have another rate hike. And just want to kind of, I know it's nothing that we were kind of expecting it, but it's always, yeah, I don't know. When you get it in the flesh, you don't necessarily want, you don't want that to happen. But just so let's kind of get into it with the slides, and let's see. So basically, um, I mean, here we are. We are, we're expected to raise. The Fed is expected to raise it by 0.75% by November 2nd. So that's what's looking like with the upcoming meeting. So it could be a 50 basis point rise or a 75 basis point rise, but it's probably going to be a rise, and I think that's just the case. It's going to be a rise in the prices. I mean, in the interest rates, and of course, this will probably hurt most portfolios. I got stopped out of two more positions today. I got stopped out of my position in Sinclair, DINO, and also in LNG, which is Cheniere. And currently, I only have one position left, and that is with ExxonMobil. So basically, I think the best thing to do right now, and is really just to be on the sidelines here. That's kind of how it looks. I mean, the best place to be right now in the market is on the sidelines, because the market is definitely showing us that it really prefers it if you are in cash and nothing else. So I would recommend building a watch list. By the way, if you jump on over to www Dallas Trading Floor, I've got some lists available. I've got the ready list up, which you can get. That's very helpful. Again, we're waiting for the follow through day, and we hopefully will get that in the near future. But we're waiting for the follow through day, and the ready list is sort of a list of stocks that potentially you could move into that are looking fairly decent. But right now, I think your best bet is to be all in cash right now, because with this Fed rise, we're probably going to see another leg down. I'm expecting about another 20% down here. This is kind of this little chart here that we're looking at. This is kind of the consensus. The consensus is that it's going to be a 0.75% move up in interest rates right now. For the first time in a long time, um, rates are above 7% for 30-year mortgages. So that's not looking as good as well. So this is going to cause, remember, just really 6 months ago, the average mortgage rate was a little bit over 2%. So that's almost a 200% increase in terms of the pricing on the mortgage. And this is going to cause a lot of weakness in a lot of the asset markets like housing. So I just think we're going to see at least probably another, I would say, 20% down there. Basically, the only thing that I have currently is Exxon, and it was down a little bit today, holding at about 98. Holding at about 98 on that. So it's holding its own, but would like to see it do better. So let's get into some of the questions here. Oh, there we go. And just to take a quick look at the only holding that I have currently, and that's ExxonMobil. And ExxonMobil today was slightly down, but we're still seem to getting support right about the 100 mark. We are definitely below the pivot. The pivot on this one, of course, is about 104. So it's up a little bit after hours, but it seems to be holding. The price of crude is bouncing around, so who knows where that's going. Anyways, so let's get to your questions. Thank you very much for that. All right, here we go on the comments. Let's see. Can't lose. ASO. This is American Sports and Outdoors. This is from Charles. Let's take a look at this one. ASO can't lose it. It seems Well, let's take a look at the chart for ASO. I haven't been in American Sport. I haven't been in this one in a little bit, so not as haven't been watching this one as as much. They're very big. By the way, these stores are very big in Texas. Now, here's the problem with the with retailers out there is, I think we're just seeing issues regarding any kind of retailers. Walmart, I think, is coming up to a point where it's going to be a near short here very, very soon because they do have, they do have inventory left over from the summer. They did not sell all of the summer inventory. If you go around and drive around to some of the Walmarts, you're going to see inventory in sea containers in the back of the stores in a lot of these because they did not sell all of their inventory. So not necessarily a great thing. But let's look at American Sports and Outdoors. It's got a very strong checklist, 78. The sales though are waning. I just even though it's looking like a nice reversal, I just think that American Sports and Outdoors. I wouldn't be a buyer here. Matter of fact, I just wouldn't hardly be a buyer of anything right now until we get a follow through day. Looking at the weekly chart, we did have the last quarter. We're down a little bit on in terms of the sales and also in terms of the profits. So, that was so if you're in it and you're holding on, you're less than 7% down, I'd continue to hold it, but I would not enter a new position here. I just wouldn't. I don't think it's I just don't think now is the best time to be to be there. So let's look at for Sam. Let's look at the spider, and of course this is the one I do believe. I do think we're going to see a movement down on the spider. Um, I do think we're going to go to 320. That's my guess here. Now, currently we're at 385.44. It was up a little bit in the after hours, but I definitely think we're going to take another leg down, and I do think that leg is going to be below the resistance. The floor right now on the spider is at about 362. So that's right about here. Um, it, it's right about 362. So I do think that we are gonna fall below that. Now we did have a little bit of bounce here, but I think with these new numbers coming in, and this is the 10-minute chart here, we did have a little bit of bounce. You can see it definitely has some support, and that support really is about 355 or so. But I definitely think, and we did have some buying coming in, but I definitely think we're going to fall below that, and we're probably going to move down. And I do think we're going to move down, another 10% or so on the spider. That's my guess, based on what we're seeing. So I think that's very likely. Um, my shorting account is on fire. Excellent, Tony. No, you've done great. Be a little bit careful. I think we're going to get a dead cat bounce. I haven't been that active in shorting. I'm thinking about putting in a short on Walmart. Why? Because, well, again, we have that inventory issue, and let's take a look at that Walmart. So this is a possible idea for a short. WMT, of course, is the symbol for Walmart, and I want to show you kind of where I'm looking possibly to short this one. We've come back up. We had a nice bounce today on Walmart. It moved up after hours, basically at 132. The question is, where is the 50-day line? I think that's really where you want to short it, is at the 50-day line. And currently, if we look, the 50-day line on this one is 132. So I believe I'm probably going to be entering a short position tomorrow. I do believe that we are going to see a leg down here on Walmart. And the reason is I just don't think that now their earnings are in relatively short time, but I do think we're going to see a leg down in Walmart. They are starting to build inventory. Their turns are not as good. They did have, they were up same store sales last quarter. They were up, and they did, but they had a fall off in terms of profit, and they had a fall off in terms of profit. So this is what I'm looking at. Their sales are definitely slowing. They're only up 8% last quarter, but their profits are starting to move in the wrong direction. Also, if you'll notice, the PE ratio now is 21 on um, on Walmart. Basically, let's take a look at compare BJ's with Walmart because those are the two I think that really are significant here. I wouldn't probably short BJ's, but I would definitely consider, I would definitely consider shorting Walmart, and I may be shorting Walmart tomorrow, but I have to see how it sets up. Here's the comparison of the two. Here's the comparison of the two uh, um, of the two stocks. As you can see, here's Walmart on the bottom. It's kind of just going along relatively flat. BJ's has moved up above here, but Walmart has a potential of moving down much more, primarily because it's right now, it's building its inventory, and that could be really a really a big deal. FIVN, that's interesting. Shorting that one. Let's look at FIVN. Five? Is it 5.9 or is it 5 and below? Let's see. Let's see if we can. FIVN. This is for Tony. Thanks for bringing this up. Appreciate it. Yeah, this is 5.9. Yeah, this probably is a good short. I agree with you on this one too. Um, let's kind of look at this as well. See how much they have lost in terms of their price. I haven't been watching this one as close. Look at that. Wow. Okay, yeah, that definitely moved down, definitely lower. It's got a little bit of a dead cat bounce. And let's look at the daily chart on this one. Yeah, it looks like it's getting, yeah, it still has a fair amount. Yeah, okay, so it's lost since, I just want to see how much this has lost. Okay, okay, yeah, you're definitely right because we could definitely fall a lot more. We could definitely fall a lot more. So it looks like there's some support probably at about 50. Yeah, 54. Look at that 8 relative strength. Wow, that is not what you want to see. Definitely. There we go. Let's go over here and let's look at some of the fundamentals on. Okay, so their sales were up. That's good. Profits were up. Interesting. Last quarter. Um, Price to earnings 45. Okay, that's within. It's a little bit high, but still within range. $2.19. So they're definitely making profit. It looks like the estimates are that they're going to be profitable next year too. So they're not looking to go unprofitable. Interesting. I don't know if I'd be as short on this one. Looks like it's already done its damage. I mean, when it really probably to short it was last week, but that's always it is with shorting. I mean, it's hard because it's so simple in hindsight, but not in you know not 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 when it's happening. All right, AZZ. Let's look at that AZZ shorts. These are interesting. I don't know this company either. Yeah, look at that. Wow. These have all had gap downs. Yeah, well, gap down, especially if it rallies to the beginning of the gap down, that can be a good place to short it. But typically, the shorting is when it comes up to the 50 or the 21-day line. That's typically the classic place to short it. But very, very interesting. Very interesting. Charles is asking about Chevron. And let's take a look at Chevron, CVX. And the XLE took a real dump today, really bad dump. This is staying above the 50-day line, so it's got some support there. Hmm. All right, I want to kind of compare Chevron with Exxon just to see. Mobile, there we go. Yeah, they're pretty similar, and the XLE, of course, is very similar to both of them as well. So let's look at this comparison. So this is comparing Chevron with ExxonMobil. ExxonMobil, a little bit better performance over last year. Let's look at the last quarter. That would be 7/1/2022. Yeah. Okay. So very, very similar performance from both Chevron and ExxonMobil. A little bit of a change just in the last few days, but nothing really, almost the exact same trace. So very interesting there on both of them. With Chevron, when you're buying Chevron, essentially, you're buying Chevron or Exxon, you're essentially buying the XLE, because that's the major component of both of the XLE is Chevron and Exxon. So kind of interesting there. What about the QQQ? Now, I would be very, very careful with the QQQ. Why? Because, of course, with this interest rate raise, it's very, very likely that we're going to see a drop even more so, if you can believe that, in the in the Qs because um, higher interest rates just do not favor growth stocks, and as we know, the QQQ is made up of the 100 biggest growth stocks, really, that are all in the Nasdaq. So I definitely see the Nasdaq moving lower. Let's kind of look at it, and this is the chart, essentially an easier to read chart of the Nasdaq. This is a little bit easier to read chart of the Nasdaq. So you can see basically since in the last year it's been awful. It's also been, and this is really due to obviously the market, but interest rates definitely affect the Qs probably more than any other. Let's compare it to the Dow Jones. This is the Diamond, the DIA, which is the ETF. It's almost the same for the Diamond. Uh, let's look at the oil, XLE. Yeah, okay. So pretty similar, interesting. So generally speaking, the same trend. So looking up here at about the 24th. So in the last week, there's been a divergence, obviously, between the Qs and the oil stocks, but basically the same trend is it's all down. That's why we're pretty much all in cash, is because this is giving us pretty much the same read on both, on both the XLE and and the Qs. So right now, I just think you got to be you could possibly, I don't know if I would short the Qs here, because I do think there is going to be a dead cat bounce, but I think the Qs are definitely going lower. I think the QQQ is definitely going to move lower. I don't think there's any question about it. Any question about it? Ollie's Bargain Outlet. I do like Ollie's Bargain Outlet. I haven't traded it in a while. Um, Ollie's probably could benefit from overstocks in other retail stores because the sales just weren't that good. They just weren't that good this quarter in almost any of the stores. So Ollie's is going to benefit from that because, of course, they're a retailer. They liquidize or whatever. They liquidate the retail. But even that has been, as you can see, it's still in the downward trend. We did, you know, we did sort of move up a little bit on the relative strength, 72. In this market, this should be a higher relative strength than 72 because everything else has fallen so much. This should be higher. So again, it is trading above the 200-day line, but again, I just, right now, I think we just got to wait for the follow through day in order to do anything. All right. I am trading Sox's and SQQ in waves, 30 to 50 shares. That's interesting. Very interesting. Not a bad idea. Not a bad idea. The thing about the SQQQ you got to be careful on is that there are a lot of derivatives in that one, and that can be tricky because it can turn very quickly. But let's look at that one. This, of course, for everyone out there, is the inverse. This is a 2x inverse of the QQQ. So it's an interesting trade. And there we go. There it is. There's the kid. It's been up nicely. It's definitely an upward trend. It's 98 relative strength. So you can see how much the market has been moving lower Is Domino's Pizza a buy? Let's analyze that. Domino's is one of those really interesting stocks that over the last 10 years has had some of the best performance. Unfortunately, that's not what's happening now. We have a downward trend in Domino's. Let's go to I just want to kind of go to get a 20,000-foot view on Domino's. And as you can see, I mean, man, Domino's from, basically 2008 all the way till now has just been doing fabulous. But for the first time, well, not the first time, excuse me, in 2018, it definitely dipped to the 50-day, the 50, the 10-week moving average, and then but it's below that now. So, and it's got a lower relative strength. So, unfortunately, I think that it's not a good time to buy Domino's. Again, not a good time to buy Domino's. I wish it was. You think this is really interesting. Um, Netflix is a really interesting case. I think that Netflix may be close to bottoming. Um, you know, it's lost so much of its value, and it does look like on this chart, and this is the monthly chart here. The reason I'm doing the monthly chart is because that's going to be kind of where we're going to see the historic bottoms. Now, this right here is the top that was made way back in 2014. This is probably where the resistance is. And this is a really good point that you're making here, Troy, because this might be at about 127, 120. I think we could still see this drop a little bit more, but we are getting some support. So let's go to the weekly chart and see if it has more to drop. And yeah, it's starting to get some support. So, when these stocks, they just refuse to go down anymore, that's sort of when you want to see the bottom. We did have a little bit of a pullback today, but it does seem that 200 seems to be a really good number for for Netflix. I mean, Netflix's numbers are strong. I mean, they have sales growth, they have profitability, and they have a relatively good for a PE ratio of 20. Now, this is not bad. It does look like the most of the damage has been done. I mean, it went all the way here from it was way up here at 600. Now, I did short this. Um, I did short this a few months ago myself, but I haven't touched it since. Um, I think we could be seeing a bottom here. I agree with you. I don't think it's overvalued. I don't think it's overvalued. All right, let's look at CRM. This is CRM, of course, for everybody out there. This is Salesforce, and I want to look at the stochastics here for that. Put those stochastics on. There we go. Okay, so it looks as if um, we are. No, this is going. This is going to still go lower. I think it's. Yeah, I think it is oversold, but I think it is oversold. You're right about that. The question is, so this one, under normal circumstances, this would rally. That would be a good place to short it. I don't know. This is interesting. Charles is saying that Oxy is pulling back to the 21-day line. Let's take a look at Oxy here real quick. Yeah, but it's sort of not overbought or oversold. It's sort of in the middle. Yeah, looking at the stochastics. Let's look at the daily chart for that one. Let's see. Oh, I'm sorry. Wrong answer. It is definitely um, overbought. Interesting. So yeah, this is going to move higher probably. This is going to reverse. Yeah, yeah. I think if we get a decent day, this is going to probably reverse higher. Yeah, this is probably going to reverse higher. Let's see how close to the 21-day line it is. Pattern reckoning. Let's look at the we are very 66, and what are we at? Yeah, yeah, this is gonna reverse higher. Yeah, this is definitely gonna reverse higher now it's pulled back the 21-day line. Very interesting. Very interesting. All right, let's for let's look at Mastercard. Is it a buy? I doubt it. There's very little right now that's a buy. It's better to short in this market. Yeah, no, I would say that Mastercard is not a buy, and there's a reason why. Reason why it's not a buy. If you're looking, and this is the monthly chart with stochastics, you see we're still not, we are getting to oversold condition here. We definitely are. Looking at the monthly chart, we're definitely getting down to the oversold condition. But in this market, I don't think I would. Yeah, is that a buy? Well, it's getting down to an oversold position, and yeah, it could move higher. But no, I still think that we've got a little bit. It's got a little bit more damage. So I would not be a buyer here. I would not be a buyer. Not be a buyer. Yeah, Salesforce's PE is way too high. I agree with you on that. But in if the interest rates weren't so high, I wouldn't be looking at PE. I'll be honest with you, I wouldn't. But in this environment, everything that has in a high interest rate environment, high PEs are punished. That's just a fact. And Salesforce has a high PE. You're right. I mean, 34. Now that's not an ultra high PE. I mean, if you want to see a really high PE, look at Peloton. Even with its, but it does still have it does still have pretty high PE. So I think it's moving down. And of course, this is a Dow stock. This is a Dow component, which is amazing to me. Anyways, it's amazing. All right, debt versus savings, as low as nothing credit. Credit companies will be writing off losses. Oh yeah, absolutely. You're right, Charles, is about this. As a matter of fact, this is part of the reason why we're seeing um, cash right now is king, and a lot of the banks are illiquid, and they're gonna have some serious losses, especially when they get rid of the moratoriums uh, on forbearances for mortgages, which is starting to happen. You're gonna see tremendous defaults, and you're absolutely right. I mean, that's one of the reasons why cash is king. So right now, the best time is right now is to be in cash. All right. Oh, this is interesting. What about metal? 5 years low. Well, yeah, no, I don't think all metals are. Yeah, I don't think all metals are 5 year low. That's interesting. Ah, here we go. Tesla has a 78 PE ratio. Good vibes. No, no. I think it's going to take some time for Tesla. I wish I could. I love Tesla. I made a lot of money on Tesla, but I'm not in it, and I think it's going to be much more difficult to make, you know, to make money on Tesla. Tesla is trading below the 200-day moving average, so money is flowing out of Tesla. That's just a fact, even though they have good sales. So I think that even though if you look at the stochastics, we are definitely oversold here. So we might have a momentary movement up, but the general trend, unfortunately, right now um, for Tesla is down. So I wouldn't hold it. Bonds. This is the real crisis. Are the bonds? Let's look at the TBT, and this is essentially an ETF that follows the inverse of the bonds, and I think that's very telling. This one should do well with this interest rate raise. I think we're going to get it move up even more. Um, bonds are just, as you know, if you remember from your finance classes, as the value of the um, as the interest rates go up, the value of the bonds go down. So that's the real problem. That's the reason why. I mean, I think that central banks are going to have to intervene and buy bonds because hopefully it won't get to the point like it did in Japan where the central bank started buying corporate bonds. But we could get there. So yeah, the bonds are very weak. All right, and we're almost at the end here. Also buying DRV that should be the inverse of real estate growth. That's very interesting. That's a good point that you're talking about DRV because you're right. Real estate is going to be a problem area, and this is a great way to play it. This is a great way to play it. I mean, look at this movement up here. Now, unfortunately, the correct place to have bought it obviously would have been about the second week of September. It's always so easy in hindsight to see this. And at a pivot at 61 currently, it's at 75. But I think this one is going to go higher. I mean, look at this relative strength to 99. So I agree with you about it. I agree with you about it. All right, let's look at Google real quick. This is probably the last one today. GOGL. Of course, this is the A shares, and this is one of the strongest of the techs, and it's also moving lower. But let's look at the monthly. Yeah, see, this is what concerns me a little bit. We've only had a few times in the history of Google where it's actually touched this line, and it looks as if it's conceivably it's significantly moving below. It's dropping below this. This is not a good sign. Now, interestingly enough, we're seeing fairly low volume, so it seems like people are holding their positions. Um, and it is, if we look at the stochastics here, it is basically oversold. Now that's on the monthly chart. Let's go to the daily chart because you can't really, yeah. So we're starting to see it went from the oversold position to now it's moving up. So yeah, we're going to probably see a bounce here. Probably not much of a bounce though. My guess is that Google is going to bounce to probably the 21-day line. That's my guess. And the 21-day line is at about 101. So currently, Google is, you know, 97. So it's not really much of a bounce there. So I don't know if I'd want to risk it for a bounce of 3, but I definitely think it's going to bounce up a little bit. But I think, it's going to get resistance at the 21-day line. My 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 take on it. Where is support for Google? Good question. Let's take a look. The real way to see it, I think, is to go out here to the weekly chart and look to see where the last big support was. And that would have been about right here. Yeah, okay, so it's below that. So this is the next support down. Boy. So it does look like there's some support at about 92, interestingly enough. Yeah, about 92 is where your support is going to be for for Google. At least hopefully it'll stay above 92, and that does look like support. But the long-term trend of Google is downward. So I would consider if you are in Google and you want to stay in Google, maybe paring back your position a little bit, maybe selling a little bit. And because I think it will bottom. I mean, I don't think Google's going out of business, but I think it's going lower. And I don't think it's a good idea to I think I think it's a good idea to reduce your position. That's my take on it. Well, thanks everybody. Thank you so much. I'll be back tomorrow. Sorry I was a little bit late today. I was talking to a data analytics professor here at SMU. If you're in the Dallas area, they have a great department here. Very interesting. Unfortunately, it went a little bit long, and we're talking about supply chains and stuff like that, and very interesting stuff. I'll be back. I will be back. Oh, any water plays? No, not really. There is a tanker company, but other than that, it's just really bleak. I mean, I wish I could encourage everyone. Right now, I think the best place to be is in cash. We need to wait for a follow through day. It's going to come. I mean, the follow through day is going to come. But I think we just have to be very, we just really should be in on the sidelines right now, and we should be entirely or nearly all in cash and waiting for the turnaround. I mean, we are going to have, it is gonna move. It is going to bottom, but it's not bottomed yet. And I definitely think we may have to put in another 20% on the spider before we're there. So it's a good time to be in cash right now. The market has been forcing me more and more into cash. Again, I really only have one position, that's ExxonMobil, and everything else is in cash. And most of my portfolios is all cash, except for my one trading portfolio. It's I only have 10% in Exxon, and that's it. So I will be back tomorrow. Oh, we have maybe one more question here. Thank you. Yeah, I have to agree with you. I wish I didn't agree with you. Because I don't want to be political, but yeah, we screwed the pooch by pushing up interest rates and getting rid of oil and gas, domestic oil and gas production. I mean, that's double whammy. That it's going to hurt everybody. But whatever, you can't fight City Hall. Okay, I will be back tomorrow. Thanks again, everybody. It's so great that you're hanging out with me. We're going to get through this period. I mean, don't get discouraged. This is the hardest part of trading. Don't get discouraged, because when this thing turns, when everybody is saying it's the end of the world, and that's coming, because I've been through several of these. I mean, I was here in 2008, 2000, and also, and believe it or not, just barely in 1987. People are going to say, it's in the world. I'll never invest in stocks again, and that's going to happen. It's going to happen probably pretty soon. I think probably within 6 months, people are going to be saying it's the end of the world, and then we're going to start coming back in with a very strong watch list. And so just hang in there, keep the market, let the market draw you in. Don't you know, patience will pay huge dividends, and it will pay dividends. So, I'm going to try to work more on some shorting ideas, because I still think there's a lot of stuff that can shorten. And obviously, Troy, thank you for bringing up your shorts. Terrific stuff. I do think that we're setting up with a Walmart short, based on just weak retail and the fact that their inventories are growing. So there are going to be some opportunities as well there. But at least for now, thanks everybody, and do sign up on the Action Trade Alerts. Super easy, just by going to www Dallas Trading Floor. I'll be back tomorrow at about 5, hopefully. Happy trading, everybody.